this is a difficult topic. I happen to think that if we should have an all-out trade war, all of the threatened tariffs which the president has discussed, including on every last dollar of China exports to the U.S., on vehicles and vehicle parts, no matter where they come from and so forth, if all of those threatened tariffs are actually imposed and the full retaliatory ones are imposed also in response, I don't think that's a good thing, and I don't think financial markets will react well to it at all. Now, at the moment, markets think either that these full tariffs will not be imposed, or if they are, that they'll be short-lived. So if you look, for example, at metals futures, like aluminum, for instance, or platinum, you see that futures prices out, say, a year are lower than spot prices. What does that tell you? It tells you that the current increase in metals prices, which is driven to some extent by tariff fears, are not expected to result in long-term tariff application. So right now, the markets don't think that we're going to have either a full war, or if it happens, it'll be short. If that proves wrong, I think the markets will react badly, and in turn, I don't think the president will stick with it very long. But that all remains to be seen in terms of what, for example, the China retaliation and the overall China position is, because the president has put China in a tough spot.
Roger, it's David. I mean, you spend a lot of your day, of course, your day job, advising corporations on decisions they'll make, sometimes involving whether to buy another company. Are you seeing any hesitancy on the part of boards right now to make decisions based on concerns about the changing landscape of trade?
Maybe there are one or two examples that I'm not involved in, David, which would be very specific to a particular sector, for instance, steel. But the answer otherwise is no. I'm not seeing any hesitation. And as you well know, because you follow this as well as anybody, the data on just global M&A volume, number of deals, and so forth continues to be quite strong. So the answer is no.
So we would expect, I guess, to continue to see a fairly decent pipeline, in your estimation, in terms of transactions and the like.
Yes, but remember that this very healthy level of M&A volume reflects 3 or 4 underlying fundamentals, and it's necessary that they continue for that volume to itself continue. And they are robust credit availability, relatively low interest rates, relatively good levels of business confidence, and continued handsome equity valuations. So if we were to have an all-out trade war, and as I said a moment ago, the market is skeptical that that'll happen, that could undermine the equity valuation piece of that, and that in turn could affect M&A volume. But right now, those 4 fundamentals are in good shape, and therefore M&A volume is strong.